All right, admit it. You have crypto and blockchain questions, but you're afraid to ask. Well, here we're going to go over some questions, and also we're going to provide some answers talking about, crypto and blockchain, because I get it. It's kind of a confusing concept. I've been doing it for a while. And who am I, by the way? My name is Ken French. I'm with vastsolutionsgroup.com. Been doing crypto for about a decade now. Far too long, if you ask me. No. I'm just going to answer some questions that we've gotten from to our office. Hopefully it can help you, as a matter of fact. And by the way, again, it's vastsolutionsgroup.com. We're talking here with Vast Voice, which is the media arm of vastsolutionsgroup.com. And again, I'm Ken French, been with the company for quite a while, and on the board, and now I'm basically kind of the talent, kind of talking about different elements of tax crypto. We use artificial intelligence to lower tax liability and potentially also to help with crypto and blockchain investments. Well, so let's go straight into it. Years ago when I started investing in cryptocurrency, I had so many questions. It was crazy, right? And back then there was no one to answer. Actually, back then people were laughing at me for investing in this quote crypto stuff, right? I was a big proponent of not only crypto but the blockchain, what it's going to turn into. Here we are in 2022. People don't realize that it hasn't even started yet. Wait, when we start seeing applications for the blockchain, the underpinnings of crypto, then you're really going to see it's going to make a lot more sense, and it's going to really explode. We're still at the infancy of the whole process of the blockchain, and also, I guess you could say, crypto. So let's go. Here I'm mentioning blockchain. What is it? It's a new technology. If you think about it, that has the potential to change really the way we do business. It's going to take over areas like, I'm going to say, finance, government. It's going to take over a lot of elements, a lot of contract. These things, smart contracts, which we'll get into. It can be defined as an online ledger of transactions that are secured by cryptography, or it secretizes all the information to a certain extent. It's essentially, really, if you think about a decentralized database with records organized into these things called blocks, and they can't alter them. So once a transaction occurs, it's in there forever. And the only way to alter it is by doing another transaction in another part of the blockchain. But still, that initial transaction is always going to be there for you, if it's a private contract, you and the other party, or you if it's just for something that you did privately on the blockchain. If you do a transaction, again, it's recorded forever. It just really cannot be undone. It can't be rewritten. So, is blockchain technology growing in itself? Well, the answer to that is yes. It's projected that blockchain will be worth about $60 billion by 2024. So let's review that. $60 billion by 2024. So that's a huge jump from back in 2017 when I remember it hit $1 billion. It's going to be a lot more in just a short 3-year period, right? If you're not familiar with the blockchain right now, it's the time to get into it, I would say. Our blockchain and cryptocurrency is the same thing. Blockchain, again, it's a type of database that can store digital data in a way that it makes it difficult for people to tamper with it, or really impossible, right? Cryptocurrency, it's money created by encryption as opposed to being printed or minted like regular currency, let's say it via a government as an example. So if you really think about it, Bitcoin was the first blockchain-based money or cryptocurrency that was ever made, right, in 2008 and 9. Crypto uses the blockchain as its backbone, as its foundation. And then the question is, well, can I get rich by investing in blockchain domains as we speak today? Well, if you think about it, just like getting into real estate, it can get you rich, right? Buying blockchain domains, yep, it can get you rich. Or at the same time, it could be, you could invest in the wrong things and then potentially lose some money, right? So blockchain domains are the newest form of asset really that's available on the blockchain. So not only do blockchain domains potentially provide a lot of potential returns, they also provide utility in that you can use the application for developers, blockchain service providers, and even blockchain project owners. You can do a lot of stuff with it. The number of blockchain projects, it's going to grow. I'm just going to tell you, using those numbers, it's going to grow, right? Do you have to worry about taxes as it relates to cryptocurrency and blockchain? Well, that's our specialty at vastsolutionsgroup.com. So as an investor, one of the most important things you can do is to plan your taxes, especially when it comes to crypto. So it's not something that should be overlooked or ignored meaning taxes in crypto or maybe even the blockchain. With tax day coming up, well, it's always seemingly coming up either, April or October in the United States. It's at least the time to start thinking or planning or forecasting. We are big believers in forecasting tax liability for entrepreneurs. And right now, I would say probably whenever you're listening to this podcast, it's probably a good time to at least plan, at least touch base with your tax provider and see exactly what he or she is thinking as it relates to taxes in cryptocurrency. And one way, I'll go into a little bit more detail because that's our specialty, I guess. Partner with an accountant, a qualified accountant who can help ensure all your bases are covered and there are no loopholes that are going unnoticed or unresearched. When it comes to tax, it pays to have someone who knows their stuff. I'd be very surprised if there's someone out there that is making sure they have all their deductions, all their specifics in line with crypto investments. Understand how blockchain and cryptocurrency is taxed. Each specific country has its own tax laws. Make sure that you're in communication with the specific region that you're even doing some trading with, if you're doing it through a network, as an example, or a DAO. In some cases, cryptocurrency transactions may be subject to capital gains. Hopefully your portfolio is going up if you're investing in crypto, right? Income generated from blockchain activities may be taxable. You know how that goes. Businesses that accept cryptocurrency as payment, which we have at vastsolutionsgroup.com since 2015, we have to report the fair market value of currencies on their income statements and to the IRS. In our case, we're in the United States. So then the question is, well, how do I get started in crypto investing? There are many, many ways to do it. Luckily, cryptocurrency is kind of new, so there aren't that many rules per se as it relates to that. You don't have some governmental agencies that are kind of overseeing it in some cases. So you can jump right in. It's a little bit easier than investing in kind of traditional securities, or at least sometimes. One such place to get started by opening an account I'm just going to throw this out, not paid to do this, at Coinbase.com or a similar, crypto brokerage firm. Coinbase is a place to purchase crypto and also these things called NFTs, or non-fungible tokens. It's one of the easiest methods of purchasing cryptocurrency, at least right now. Coinbase was founded back in 2012, and it's grown at an exponential rate. It's probably one of the biggest name places to buy cryptocurrencies. What I would say is, Coinbase, it has Bitcoin, Ethereum, Litecoin. It has a whole bunch of different cryptocurrencies to invest in potentially. In recent years, Coinbase, it's been pushing towards, allowing more and more crypto. So that's just something to keep an eye on. Now, what do we mean by crypto wallets? Everyone uses that term. I have a crypto wallet, right? A cryptocurrency wallet is a software program where basically coins are stored. It's almost like a physical, think of it as a USB drive. The only way to access the coins in the cryptocurrency wallet is through encrypted or secretive keys, usually two keys, one private and one public key. The crypto transactions will be communicated on the blockchain, to the blockchain, if you think about it. That's the cryptocurrency's distributed ledger, as I mentioned before. And there's three main types of cryptocurrency wallets. So there's the software, the hardware, and paper. So the best cryptocurrency wallet depends on the security level that you require, right? So do you want to store everything for yourself, or would you rather have someone else do it? Anyway, a crypto wallet may look like any other software program you download and open, maybe in Chrome or whatever the case is, but it really isn't. These crypto wallets, they store your private and public keys, as well as they interact with the various different blockchains. The security of these cryptocurrency wallets, they really depend on the strength of your password that you set up when creating the crypto wallet. The stronger your password, think about this, the stronger your password, the safer your crypto will be. Private keys are stored in a file on your computer potentially. This is how you have access to the coins. If another person gets access to your private keys, they too will have access. Not good generally, okay? So you got to make sure that generally you're the only person who has a copy of that, or a very trusted individual. And then some people say also have an attorney potentially that has access to half of it, and someone else who has access to the other half of a password, as an example. So those two must have to work together. I would say just make sure your cryptocurrency password is very, very safe. So cryptocurrency hardware wallets are super secure because all the cryptocurrency transactions must be confirmed using the buttons on the cryptocurrency hardware on its wallet, on the wallet itself. Now, maintaining cryptocurrency hardware wallets also keeps all your cryptocurrency's transactions secure. So you'll need to manually enter your crypto wallet's password every time you want access to it. So again, that password is really important. So okay, let's talk about the three things, or I should say the things to know before getting started in trading. This isn't an all-inclusive list, but it's a list nonetheless. One of the most important things to remember before buying crypto and thinking you're going to get huge rates of returns overnight is that it's still in a developing stage as an industry. What does that mean? It's not even there yet. When I say there, it hasn't hit its maturity level. So it means cryptocurrency, it has room for growth, yeah, but there's also the downside because you don't know what's going to happen potentially because it's so brand new. And once again, crypto it's risky. It's next thing many people, let's just say all of a sudden they forget about cryptocurrency. It's nothing. Well, you could lose the value of your account because you've invested in a cryptocurrency and it's not doing well. Remember, because if you really think about it, by the way, cryptocurrency, it exists via technology, and you just never know what's going to happen with technology. Hopefully, it's going to be around, but crypto, it's not a tangible asset. It's not like real estate, or it's not like a dollar bill, as an example, which even some people say and speculate that dollar in wherever the country is, it's thrown out by a government, so it still potentially isn't worth what some people would think. So now you got to remember, do you have the stomach for cryptocurrency trading? Is it the right thing for you? Before buying crypto, it's important to think about investing in general and then think about crypto investing. It takes it to another level. Cryptocurrency's current level of risk, compared to whatever you're into, it could be low, could be high. It really depends. Crypto can provide huge returns, but it also means, it has unlimited potential to go up. But then again, what does that mean? Things go up, it can also go down, right? Beware of, this is a big deal. Beware of cryptocurrency pump and dumps, as I think about it. I'm just thinking of these off the top of my head, by the way, but these are huge to think about. So all of a sudden someone might be pushing cryptocurrency. All of a sudden they say, all right, it's hit a rate of return that I like. And if it's a small amount of market capitalization or cryptocurrency that's out there, all of a sudden they dump it because they need to, for whatever reason, all of a sudden it loses its value. You could be the one holding the bag. All of a sudden buying something at making a number up, $100,000 of value, all of a sudden it goes up to $200,000, and someone says, I'm going to dump it because of whatever reason. If they own enough of the cryptocurrency, it goes down to $10,000. You've lost your money because of a pump and dump. Let's call it a scheme. Understand, cryptocurrency trading strategies to use. There's so many out there, right? And I'm gonna make mention of one off the top of my head, by the way. It's called, and it's in the securities or traditional investment world as well. It's called dollar cost averaging. DCA, it's called that because, it takes the guesswork out of your cryptocurrency investing by making kind of ongoing purchases. Instead of thinking, I'm going to buy a whole bunch today, then what you're basically doing is buying it over X period of time, every month, every week, or every year. So let's say it's January 1st. All right, I'm going to buy it on the 10th of every month, as an example. Or I'm going to invest in crypto every Monday, as an example. So anyway, potentially what can end up happening is you can have a lower purchase amount or per transaction amount because you're buying little when the portfolio is up, or let's say the security, and a lot when the security is down, or in this case, cryptocurrency. So, there you go. Hopefully this is helpful. Hopefully, there are some things at least to keep in mind before buying crypto. Crypto, it continues to be an industry that's way in development, if you only knew. But at the same time, that being in development also has a lot of upside. With upside, you have downside. I wish I had all the answers back when I started in crypto investing. But what I would say is, if you have any questions, please feel free to call us, contact us. Our web address, again, www.vastsolutionsgroup.com. Again, www.vastsolutionsgroup.com. And once again, my name is Ken French. It's been a pleasure. Hopefully this is some way helpful and you're not too shy about getting started in crypto investing.